Hi everyone, welcome to my channel. Are you a small business owner or a founder or a homemaker or even an influencer who's still confused regarding how to maintain books or even how to start accounting? Then don't worry, I'll walk you through the simplest way possible in the shortest time on how to record your business entries in the accounts. Any business has got mainly five major categories of accounts. There is no sixth account besides these five broad categories of accounts: assets, liabilities, equity, revenue, and expenses. Assets are the items which are purchased or bought for the benefit of the business. Now, in order to differentiate asset with expenses, is you always look at the period of the benefit. If any item which is purchased for which is going to last for more than 12 months or one financial year, which is basically again 12 months, then it should be categorized as asset. Now this can be the inventory, the motor vehicles which you buy, the office equipments like laptops, table, chair, furniture, etc. You and then again cash and bank balance. Liabilities, on the other hand, is the opposite of assets. All your financial obligations that your business owes to the outsider are categorized under liabilities. Now this can be payables. Now what are, sorry, I forgot this, receivables are again cash under assets, and then receivables, if you are giving your services or if you're selling products on credit, then all your credit customers, they're called receivables. So your business has to receive money from them, so they are termed as receivables. Now the same way payables, all your all your uh, credit suppliers are accounted or are termed as payables. So if you're buying any goods on credit and your business or your company owns the amounts which are due to the outsiders or your suppliers, they are termed as payables. And you have taken any loans, be it short term or long term. Short term for 1 month or for 6 months or for 3 months or for 1 year, or long term like 2 years, 3 years, 5 years, 10 years. Those loans are again the obligations of your business. Your business is supposed to repay them, so they are categorized under liabilities. Then this is a Kenyan tax, it's an indirect tax, VAT. Now every month you're supposed to calculate the VAT payable, which is the VAT on your sales less VAT on your inputs or your purchases. So net VAT payable to KRA every month should also be categorized under liabilities. It's your business liability. So VAT is something your business owns to KRA, Kenya Revenue Authority. Now equity is assets minus liability. Whatever your business has or possess, if you deduct whatever your business owns to the outside, what is remaining is the owner's capital or the owner's money. Also, whatever money or the funds which you as a business owner are putting into the business or in the company, that's also termed as equity. Now against that equity, whatever you are withdrawing from the business, it's termed as drawings. Now owner's capital and drawings, it's ideally should be kept separate under separate accounts, but they are both categorized under equity. Revenue, if you are selling services, then it's your income. If you're selling products, then it's sales. And then other income, if you are generating income from other sources, like let's say you also have an Airbnb business, or you also have a house which you have rented it out and you're getting a rental income, or if you have invested into any stocks of the company and you're getting shares or the profits at the end of the year, or any other dividends, those are few examples of the other income. So if you are earning any other passive income as well under the business name, that can be categorized in other income. So whatever you are earning, your sales and income is all categorized under revenues. And then expenses, whatever amount you're spending or whatever you are incurring in order to generate this revenue is termed as expenses. Now this expenses have got nothing, it's just a very short period of time. The 12 months they are done, they give the benefit, and that's it. They are not assets. So for example, utilities you are paying, the fuel you are the fuel you are utilizing or you're using for your commute. So all those expenses are categorized under expenses. Now purchases, if you are into product business, whatever you are purchasing is categorized as expenses. And now what is direct expense? Now direct expenses is, if let's say if you are in a manufacturing business, then all your factory cost, your costs on your manufacturing cost, cost of goods sold, which is termed as, which includes even the clearing and forwarding if it's there, the transportation cost, the factory rent cost if it's on rent, the utilities of the factories, the direct labor involved in manufacturing it. So all those costs are categorized as direct expenses. Now whatever which is not directly related to purchases or manufacturing, they are all termed under indirect expenses. Now that could be the rent of your office, that can be even the administration cost, all the taxes you are paying, even the depreciation, advertisement, promotion, traveling cost, transportation cost, the salaries and wages, all the expenses which you are incurring, they are all categorized as indirect expenses. Now these are the five broad categories. Now which accounts should you maintain? There are 15 broad categories of account that are essential for any businesses. Now these are the general one. If you want the list in Excel, just comment below and I'll send it over to you. Cash account and bank account. If you are dealing in your business with cash as well, so ideally you should have a separate account for cash and then the bank as well. Now that's again an asset account. Now M-Pesa account, if you do most of the payments, if you are based in Kenya and if you do most of your payments through M-Pesa, then it's ideal to have an M-Pesa number in your company name and then you do the payments from it. Then accounts receivable, if you are selling on credit or if you are giving services on credit, then it's good that you have individual customer's name written under accounts receivable. This again an asset, so it should be having debit balance. All the assets are having debit balances. Now if you want to know more about the debits and credits and the nature of the, if you want to go into detail into the nature of the accounts and chart of accounts, just refer to my video. The link is mentioned in the comment section. Now again, inventory, if you are dealing with the physical products, then inventory, whatever is remaining after selling, you should always maintain an account for it. Then prepayments, now these prepayments could be for either for the expenses or even for the purchases. So it's good to have a prepayments account, so that's something like you have paid in advance, so it's an asset for you. Why? Because now you are supposed to receive the service or the product from that person outsider to whom you have paid. So that company or that business or that individual to whom you have prepaid or paid an advance payment owes you that particular product or the service. So that's an obligation on that person, and for you it's an asset. I hope I'm clear. Let me know in the comments if you have got any doubts regarding any of these accounts. Just like accounts receivable, you should also have accounts payable for all your creditors. So if you are buying goods on credit, it's always advisable to have an individual supplier account, and then the credit accounts, whatever the business owes to them is a credit account, and then again that's a liability. Now VAT payable, as I mentioned before, it's a liability your business owns every month to KRA, this VAT indirect tax. So it's always good to have a VAT payable account maintained so you do not end up paying any penalties in future. Short-term loan, if you have taken, then again it's a liability. Owner's equity, you must also maintain an equity account to know how much the business owes you, how much amount have you put in, and what the business owes you after paying off all the liabilities. In the same way, drawings account, if you are withdrawing any amount from the businesses. Now sales and revenue account, it's a must. Also you can have the sales discount account or returns account if you are having the returns or discounts quite often. Now cost of goods sold, it can include everything, the purchases account and all the direct cost account, it's an expense. Salaries and wages if you are having staff, then rent and utilities, and then marketing and ads. Now these are just a few examples, you can always add as per the nature of your business and also reduce from it, and also just leave out the ones which are not in need. So here maybe for example you could be having an administration cost or transportation cost, or even the client entertainment cost if you spend quite frequent on the client entertainment or even the traveling. So it's all up to you. I hope it helps. Let me know in the comments if this was helpful.